market that when it finally click, you're gonna be like, man, okay, I see it now. And what I'm trying to do is start teaching people how to find money flow, like find these equilibrium spots and find turning points and continuations. Now I can't say that's one thing too I'll touch on, man. Like it's so much hype out there in the industry that most people don't realize you gotta learn to take a loss. The only way to do that is to have proper risk. Cause you can have a perfect setup, and I think we all probably have seen that. Like you be like, man, everything lined up, and the market did something totally different. So what I noticed that worked for me, and we all gotta find our own style, whether it's scalping, intraday. But what worked for me is trying to find like how I did the 3-to-1, even though I had a 2-to-1 opportunity. I do the 3-to-1 to give me room when things may go wrong. So until people get used to taking my alerts or kind of the methods I teach, they'll be like, man, you just had like 2 or 3 losses in a row. And they get frustrated not knowing you got to take them little losses with proper risk. And bam, we turn around, we catch a trade for 100, 200 pips. It wipes off all the losses. And now you sitting in profit like 150, 200 pips. So me personally, it was a lot more lax on my trade. And I'm not so stressed out of all I need to find the exact point. I need to find the right, it's going against me. So here lately, I've been getting a lot of cats that, I don't know, they may have, or this is the way I can break it down. Like 2 people can trade the same exact currency pair going different directions. Michael could be buying it. I could be selling it. We both could be right. One of us is just going to get paid first. And I did this with traders before. We call it playing ping pong. So he may catch the ride up off of this pullback. And, I don't mind having a drawdown. And he sends it back down to me. We both got profit out of that trade, entering into the same exact spot. So it gets simple. Like trading, it really ain't, it's us that make it hard. It's the mental part that really screws with you. If you see here, like he would have caught the buy, caught it up. I would have been in drawdown, but I could have entered through the pullbacks. So I would have had a stacked trade. It still gave me in profit, but the whole time I'm stacking down because I'm using proper risk management. So what I generally, when I first started trading, I was like looking for the right entry, but I didn't have no understanding of things outside of the chart. So even though I say like a 0.10 seemed small, I wasn't calculating how much damage that could even do to $1,000 account. So now I'm just gonna put in like a 0.2, pulls back, maybe a 0.3, pulls back, 0.2, 0.1, or whatever, 0.3. Now I'm full size, and the market's gonna reward me for being patient. Bam! Now I got all this little drop, this 30 pip drop, full size, on top of me collecting a little bit on the ride down. So it's multiple ways to kind of trade. I always recommend against scalping, regardless. It's a big phenomenon across the market, but exactly, patience is key, man, and dedication. Just keep showing up, keep learning, do some videos every day, different content. I'm not one of them cats that whoever you guys learn from, that's what I want for y'all. So if you hearing somebody else and they styles and matching up, I pretty much know a lot about different philosophies in the market, and we can bounce ideas off each other. So my main goal is to make sure everybody's trying to win. Everybody's winning. But yeah, I get off my soapbox. So it's just most. I was going somewhere with that. So yeah, I was talking about scalping. Oh, it's really one of the hardest forms to trade. And there's really, I mean, to be brutally honest, there's not no way to have consistency with that. That goes to show like why 80%, 85%, what it's even really higher than that. I ain't saying that because it's a rare breed of people that's profitable because we doing all this retail noise of trying to trading on the 15, trading on the 5 minutes. I mean, it's just nothing but choppiness. and it really becomes like we doing a luck factor. So I'm not saying you got to stay in trades for days. You can get your pips and get out, get you 40, 50 pips, but look at these higher time frames and work in and out. So even if I'm on a 1 hour, I may want to come back and check to see if there's anything overhead on the daily. Vice versa, if I mark out something on the daily, I'm working my way down, working my way up, working my way down. These small time frames, I'm staying away from them unless I'm really monitoring the trade. So if I see like on a 5 or 15 minute, it's at a zone, I'm getting ready to take profit, and I start seeing it wick up, that's an indication to get out. Vice versa, maybe even an entry. And I wish I could just last night show an example of how, like even a 15 minute, it's a good entry or a trigger chart, but the 30 minutes is so much smoother as far as the runs. You don't have as much bounce, bounce, bounce. 15, you see y'all probably kind of see the difference out of 15, just like, now if you psychologically, if you trading this and at the same time, I hate to keep on bringing that out, you over leveraged, you're going to be looking at your money like, oh man, I was up $30. I'm up 10, now I'm just $10. Oh man, I'm back at $5. Oh, there we go. Now I'm at, 35. Man, I'm back at 20. It's a mind game that you, so stay away from them higher. If you mark off on a higher time frame, watch this time frame to kind of verify. Put your stops in. As long as it didn't hit your stop, there's no need to micromanage the trade. You have to manage it as far as pulling the stop down, things like that to lock in your profit. But don't come in here and just because I see it on a 15